your accounting tutor that desires to see you thrive in financial and managerial accounting. Today we are going to look at FIFO and LIFO, which is a inventory tracking system. Before we get into FIFO and LIFO, I just want to again just encourage you to understand that these videos are supplemental to the lectures that you're receiving from your great professors. I trust that you're using these videos to help you better practically understand accounting. And so today we're going to be looking at inventory tracking system. Okay, so with FIFO and LIFO, these are the popular inventory tracking. So what happens is for merchandising companies, they have inventory. They make money based off of their inventory. So if their source of profit, if their source of revenue is inventory, then you best believe that we want to have a pulse and an understanding, a good understanding of where our inventory is, because inventory is constantly moving in merchandising inventory business or merchandising businesses. Inventory is coming in from suppliers, inventory is going out to customers. And so we want to take the time to really understand how to track inventory. All right, so there are actually about 4 ways to track inventory. The first one, 4 ways to track inventory. The first one is called specific identification. The second is FIFO. The third is LIFO. And then the fourth one is called weighted average. Now, specific identification and weighted average are not as common as FIFO and LIFO. So I definitely just want to spend the video doing problems around FIFO and LIFO and not necessarily specific identification and weighted average. Now, if you would like for me to do videos on specific identification and weighted average, I can do a part 2 of this. Just comment part 2 in the comment section, and then I'll do it. I'll know to do it. If you don't, then I'll just assume that you don't really need to know that one. Okay, so FIFO and LIFO. So FIFO, let's talk about the first one. FIFO actually stands for, let me put it, the full definition there is first in. So first in, first out. Okay. So in other words, what FIFO means is that the first that is in on the shelf is the first to go. I'll talk about that a little bit more, but the first that is on the shelf is the first to go. That's the way I like to look at it, and the way I break it down to students where they find that most helpful. The textbook definition, if you will, is the earliest inventory is the first to go. All right, so an example of this would be like a grocery store. So if you go to the grocery store and let's say you go to the milk section, I dare you to do this either today or tomorrow or in the near future. Do this and you'll see exactly what I'm talking about. But if you were to go to the milk section, the dairy section, you go to the refrigerator, you pull out or you look at the milk, the first milk that is on that rack is actually the one that is quickest to expire. Okay, but if you were to reach behind at the back of the rack of the milk, you'll see that in the back, it's going to have a longer expiration date. Okay, and the reason for that is because with grocery companies or with food companies, whether that's fast food restaurants and different things like that, they want the earliest addition to inventory to be the first to go. Right? So if you were to think about this from, say, for example, like inventory storeroom, okay, let's say that you put all of your inventory on like a bookshelf, right? So you have level 1, which is the top, level 2, level 3, level 4, level 5, so forth and so forth. Let's say that on January 1st, you receive some inventory and you put it on the first level of the shelf, right? Then let's say on January 5th, you receive another inventory. Where you're going to put it? On the second level of the shelf. Now, if you then sell one of those products, first in, first out says you need to start from the top of the shelf and work your way down. We're going to do an example. It's going to be crystal, but I just wanted to explain the concept. Last in, first out is literally the opposite. Is literally the reverse. So FIFO is what we call it, which is last in, first out. Okay, last in, first out. Now, last in, first out is the same exact thing. So again, using that example, we have on shelf 1, inventory that we purchased on January 1, shelf 2, inventory that we purchased on January 5th. Now, if we were to take from the inventory, we'll start from January 5th and then work our way up, okay? So let's look at some examples with that understanding. So Here is an activity log that happened or occurred in the month of January. So there were some transactions that happened in January with my company, Dr. Akin. So with this information, we need to find, this is very important, the cost of goods sold. Oh, we need to find the cost of goods sold and the ending inventory. So the problem is asking us to find for us using this information, determine what the ending inventory is and the cost of goods sold number is. Now, there is many ways you can go about doing this. I have seen students do different ways, but I've also seen students try to take shortcuts here and they end up getting the problem wrong all of the time. So what I want to do is talk to you about a chart or a system that you can use that I believe is pretty straightforward that can give you the right answer for finding the ending inventory and the cost of goods sold every single time. And that system is a table. Now in the table, we're going to deal with FIFO first, but the table has 4 columns. It's going to have a date, goods purchased. So when we purchase things, so let's put that in the comments so you see, whenever we make a purchase. Okay, so whenever we make a purchase here, we're going to update the goods purchase column. Then we're going to have a cost of goods sold column, right? Because that's what we're trying to solve for. And then obviously we're going to have an ending inventory column. Now the cost of goods sold, you just want to make note of this, is whenever, not whoever, but whenever we make a sale. Okay, so whenever we make a sale, we're going to update this. All right, and the ending inventory is always updated, okay, after every transaction. So no matter if it's a sell, if it's a purchase, we're gonna always update it. All right. So this table I think will be extremely easy in helping you to solve this situation. All right. Case in point. So the first transaction we have is that on January 1, we have a beginning inventory of 140 units at $6 for $8.40. All right. So obviously the date is going to be January 1. So that's an easy one. We're going to put a 0 in here for goods purchased because we didn't purchase anything. See the activity? The activity here says that it's a beginning inventory. That has nothing to do with making a purchase. So we put a 0. We're also going to put a 0 in cost of goods. So because we didn't sell anything. Doesn't speak about selling anything. So our ending inventory is just going to be that new balance, this balance, which is going to be 140 at $6, which equals to 480. Now, let me stop there. I do want to say this to you all because some people are going to say, well, Dr. Akin, why do I need to put all of this stuff here? Why can't I just put 840 in there? The reason why you can't put 840 in there, but you have to put the units and the dollar sign is very important. I tell my students all the time, you need to put the units and the dollar sign is because each unit is going to have their own dollar amount or is going to have their own cost of goods sold amount. So that becomes very necessary for tracking inventory, and you'll see in just a moment, right? But here we are, January 1, we have 160 units at $6 for $8.40. This to me becomes our new shelf number 1, right? This becomes shelf number 1. This becomes for me shelf number 1, right? It's going to be the top of the shelf. All right, on January 10th, it looks like we sold some things. We sold 100 units at $15. Now for goods purchased, that's going to be 0 because we did not purchase anything. But cost of goods sold is where we need to update because we did sell. Well, what did we sell? We sold 100 units. Now, this is very important. Please pay careful attention to this. Please pay careful attention to this. This says we sold. So this $15 is the selling price per unit. Okay, selling price. Let me not confuse you, but selling price per unit. We don't care about the sell of the price. We care about the cost of goods sold, right, for that transaction. So because we only care about the cost of goods sold and not the selling price, all we need to focus on is the 100, right? We do not need to focus on, I want to see here, we do not need to focus on the $15. The $15 is irrelevant because we're trying to figure out the cost of the sale, not the revenue of the sale, but the cost of the sale. And so to figure out the cost of the sale, we just need the 100 units, right? So I'm going to put 100 units. And where are we going to take this 100 units from? We're going to take it from our first shelf. Y'all see that? So when we go to our inventory, so we sold 100 bikes. So we go to the bike room. On the first shelf of the bike room are 140 bikes that cost us $6. So we're going to take 100 of these bikes, which cost us $6. And that means that our cost of goods sold for that transaction is going to be $600. You see? Our cost of goods sold for that transaction is going to be $600. Okay? So cool. Now that we've done that, that leaves us a balance though. I want you to pay attention here. You probably want to slow down this video at this point because this can get a little tricky. So if we went to the storeroom, if we went to our inventory room to get 100 bikes from the 140, that means we're going to be left with how many bikes? We're going to be left with 40 bikes, right? We had 140, we took 100, so we're left with 40 bikes at $6, which is going to be $240, I believe. Okay? So now this becomes our new shelf number 1. All right? Excuse me. This becomes our new shelf number 1. Let me confirm my math here. Yes, it's $240. Okay, so this becomes our new shelf number 1. Here, we can put the word used, right? Because we use this inventory already. And so we now have a new shelf, which is 40 units at 6. Cool, so we can keep moving. So on 120, we purchased 60 units at $5 for $300. So we can take all of that, right? We're going to put it in a goods purchase. Why? Because it looks like we made a purchase. We purchased 60 units at $5 for $360. So let's do that. We're going to take 60 units at $5 for $300. Okay? You're probably like, but Dr. Akin, why are we taking the $5 here, but we didn't take the 15 here? Remember, our focus, this is the goal, to figure out the cost. Is not to figure out the sold, but it's to figure out the cost. So we're always going to be using these numbers, but we're never going to use these numbers. Okay. All right. So now we have 60 units at 5 for $340. We didn't sell anything, so we can put a 0 there. And we always have to update our inventory. So we're just going to copy and paste that over. And then now this becomes our new shelf number 2, you see? So now we have 2 shelves. Let me make a different color there so there's no confusion. So now we have 2 shelves. The first shelf on the inventory, the inventory book shelf is going to be 40 at 6. The next one is going to be 60 at 5. Again, some people are going to feel tempted to just combine these together. Don't do that. Don't combine them together because you will get it wrong all the time. These are different products, okay? One product costs us $6, the other product costs us $5. So you cannot combine them, all right? So moving along, on January 25th, it looks like we sold 80 units, all right? So we don't need to put anything in a goods purchase here because we didn't sell. But we do need to put something in cost of goods sold because we did sell. We sold 80 units. Now, should we just go ahead and put 80 units in there? No, we should not. Because the rule is FIFO. The first on the shelf is the first to go. Back out here. The first on the shelf is the first to go. So what is the first on the shelf? This one. So this one is the first to go, then we do this one. So if we are trying to fulfill 80 orders or 80 bikes, the first shelf is only 40. Okay, so we fulfill 40, but we have another 40 to go. So we're going to grab from the second shelf, but rather grabbing everything, we're just going to grab 40 of the 60. So 40 at $5 for $200. You see? All right. So what that means then is that we use this and we use this. So our new balance is going to be 60 minus 40, which is 20. Okay? So it's going to be 20 units at $5 for $100. All right? So now we move on. You see 40 plus 40 is 80. So we fulfilled the order, but we took it from different places, right? All right, let's keep moving along. January 30th, it looks like we purchased, again, 180 units at $4.50 for 810. So again, because we purchased it, we take the whole thing because this is costing us and we care about the cost. So we're going to take 180 units at $4.50 with totals to be 810. All right. So did we sell anything? No, we did not. So all we need to do is just bring this over, and this will be our shelf number 2. Okay, this would then be shelf number 2. All right, so we completed the transactions, but we're not done yet because the problem says that we have to figure out the ending inventory and cost of goods sold. So this is very important. When you're dealing with cost of goods sold, I'll put it here in the comment section. When you're dealing with cost of goods sold, you total every transaction, okay? So every transaction, we're gonna total here. So the first one is $600, right? The second one was $240, and then the third is $200. So that means our cost of goods sold for FIFO is going to be $1,040, okay? That's cost of goods sold. Now, any inventory is different. Any inventory is we take the total of the active inventory, okay? The active inventory only. The active inventory only. So what do we mean by that? Meaning that the active inventory are the ones that are labeled shelves or shelf, right? So you see how you have 2 shelves here? So we're just going to take that. That's why I recommend doing the shelf approach, because if we had no shelf approach, this is how it would look, right? And how would you know which one to take? You will just probably end up taking everything and it will be wrong. We just need to take the 2 here because these are the active inventory. How do we know they're active? Because we were labeling them along the way. So the first one is 100. The second is 810. So that means that $910 is going to be ending inventory. Now we're done. So that is FIFO. Now I'm going to do the exact same thing. I'm going to use the exact same information to do LIFO, and you're going to see the difference, right? So with LIFO, I can speed this up a little bit because I believe we have understanding here. So let's do it. Okay, so we go back. January 1, beginning inventory, 140 at 6. So we know that it's not in goods purchased, cost of goods sold is going to be 140. We're just going to update the inventory, which is 140 at 6 for 840, right? And we're done there. Then January 10, we sold 100 units. Well, again, what do we need to do? We just need to take 100 of the 140, right? So when we take 100 of the 140, that means that we're left with a balance of 40 at 860. And then this is going to become our new shelf number 1. And this is going to be used because we're done with that. Make sense? Okay, cool. On January 20th, it looks like we purchased 160 units at $5. Again, we just need to kind of copy and paste that over, right? Because we purchase and we care about the cost. This cost, obviously, when we purchase, it obviously costs us something. So we want to track the cost. So that's why we're taking the 60 at $5. We don't need to put anything in cost of goods sold. We just need to update our ending inventory. So this will become our new shelf number 2. Okay. All right, cool. So moving along, on January 25th, we sold 80 units. Now, this is where it differs from FIFO. Remember, FIFO, we started from here, then we worked our way here. But with LIFO, we're actually going to start from the bottom shelf. The most recent inventories are first to go. We're going to start from the bottom shelf and work our way up, actually. So the first thing we're going to take is the 60 at 5. Not the 40 at 5, but the 60 at 5, right? So if we take the 60 at 5, we still have 20 units to fulfill because we have 80 in total. We just fulfilled 60. We have 20 more to go. So where do we grab the 20? We grab it from the first shelf. So I'm going to come here and put 20 at 6, which comes out to be $120, right? And then we can put used here. So that means that our new Inventory is going to be 40 minus the 20. So it's going to be, again, 20 at $6 for 120. Oops, I put, hold on. I think I don't need to put that there. Yes. Okay, and this becomes our new shelf number 1. You got it? Good. Then on the 30th, it looks like we purchased 180 units at $4.50 for $8.10. So again, we want the whole thing there because this cost us money. So we put it in the goods purchase. We don't need to put anything in cost of goods sold. We update our inventory with the second shelf, and that's it, right? So what we're going to do now is figure out the total because it says we need cost of goods sold and ending inventory. Remember what we said. Cost of goods sold, we want to take everything. So we're going to do 600 plus 300 plus 120. Please look at the difference. Please look at the difference. So you see here, our cost of goods sold under LIFO is 120. Our cost of goods sold under FIFO is $40. So it's a difference. It may be small, but it's a big difference. Okay. Now, ending inventory. What should we take? Well, we're going to take the active inventory only, which is shelf 1 and shelf 2. So that's 120 plus 810. And that's going to give us 930. You see? So FIFO, 930. Excuse me, LIFO is going to be 930 ending inventory, where FIFO is going to be 910. So you see the little difference there. All right, my friends, hopefully this gives you some level of understanding on how to do FIFO and LIFO inventory tracking. Please make sure you like, comment, and share. Subscribe for sure, but then also share with others who may also need help with financial and managerial accounting. Talk to you soon.